If I were to ask you if you knew what portability means, would you think to include property tax savings? Are you one of the thousands of Floridians who have recently purchased a home in Florida after selling your previous home in Florida? Do you plan to claim the homestead exemption on the new home? Was the previous home homesteaded? Are you a homeowner thinking of selling soon and want to take advantage of the tax benefits you currently enjoy after being in your home for many years? Well, stay tuned as we go over portability and share how homeowners who have or will be moving from one homesteaded home in Florida to another homesteaded home in Florida can take advantage of the Save Our Homes provision that makes tax savings a reality. First, I want to start with sharing I am not an attorney, accountant, nor tax expert. However, as a real estate agent in Florida, I believe it's my duty to share this information about this powerful yet little-known provision available to Florida homeowners. Florida's Save Our Home provision allows you to transfer all or a significant portion of your tax benefit from a Florida home with a homestead exemption to a new home within the state of Florida that also qualifies for a homestead exemption. This is referred to as portability. This provision was created in 2008 to help people keep their tax savings and to be able to purchase another home without feeling penalized. Due to the housing crisis around that time, people were less likely to move since moving almost guaranteed higher property taxes. The Florida legislation created the ability to move property tax savings for homeowners who move from their primary Florida home to a new primary home located in Florida. Please note, this is only applicable to homeowners who have moved within the state of Florida and for homes that were and then are or will be homesteaded. We discussed the Florida homestead exemption in this video here. Click to watch. Before we go further, I want to go over a couple definitions that may be valuable to you for terms you may see as we go through moving forward. For example, real value. This is what an agent can get a home to sell for in today's market, what it would appraise for, what your listing agent would be able to get a buyer to agree to pay for your home. The market value, this is what the property appraiser site states that a property would sell for under normal market conditions. Due to the steep increase in property values over the last few years, most homes are undervalued. The assessed value. The market value minus assessment limitations from Save Our Homes. This value is usually set between 85 to 90% of the home's purchase price when a transaction is closed. You can find the value on the appropriate county appraiser website as the percentage does vary from county to county. The taxable value. The taxable value is the assessed value minus exemptions, and this is the value the tax collector is going to use to calculate the taxes due. Now again, I want to state for the record, I am not an attorney, accountant, nor tax expert, and recommend that you confirm with a licensed entity that may address any questions you may have on portability. We wanted to share this information with you as we know there are far too many Florida homeowners not taking advantage of this option. To determine the amount of savings you may port, you will have to look at the tax records for your home or have your agent look for you. Here is an example. In this example, we will look at the numbers for 2022, the most recent tax year. The calculation is fairly simple as we subtract the assessed value, shown here as total assessed value, from the market value, shown here as just market value in our example. The verbiage may be different from county to county, and this example is from Seminole County, Florida. The $276,429 minus $133,189 comes to $143,240. As you can see, this number happens to equal the sum of the total exemptions plus the taxable value. Now, every $50,000 of portability, or the taxable value, translates into a savings of $1,000. In this case, $2,864.80. Now, if this homeowner decided to sell this home and move to another home within the state of Florida and make it their primary home and declare homestead, they can lower the property taxes on the new home by $2,864.80. If they purchase within the same Florida county, some county appraisers will perform the port for the homeowner. However, not all will do this, so please always check with your county appraisers as a precaution. The ability to stack these savings is another little-known feature. If this homeowner decides to sell the second home and purchase again within Florida and make the third home their homestead, they can move the savings from the first home in addition to savings from the second home. There is a limit to the amount of stacking of $500,000 taxable value or $10,000 in property tax savings. Another item to consider is the value of the most recent home. As long as the homeowner is moving from home to home where the value of the second or next home is greater, this calculation applies. However, in the case of downsizing, the amount that would be ported will be prorated. For example, if you sell your $1 million home and downsize to a home valued at $600,000, the amount that would be ported will be prorated. Please check with your county tax appraiser or accountant for more details. Thank you for watching this video on portability. We hope you found this video informative. Please click like, leave a comment, and subscribe to our channel to be notified when we post additional videos. I am Chuck Morris with the Deborah Morris Home Team, Keller Williams Advantage Realty in Oviedo, Florida.